Hey everybody, Marty Mazzora here. This presentation is for Wednesday morning, the 29th of March 2023. This will be the morning message and your midweek technical update on stocks. What I'm going to do today, and I'm going to do it really quickly this time, I promise, is I want to touch on the SP 500, the Nasdaq, Apple, Microsoft, gold, and ag futures. And what I'm doing is I'm just basically updating you on things that I featured during the last two videos. One was Friday and the other one was over the weekend. On Friday, we talked about the Nasdaq, we talked about the S&P, we talked about the top positions in both, and I featured the top two, Apple and Microsoft, and offered a technical opinion there. And then on Sunday, we did the economic report, and then I went to the technicals and I touched on gold and ag. Two positions, two ETFs that are not small positions in our core portfolio. So today I'm going to just update that for you. I'm going to do it relatively quickly. And then those of you who didn't catch Tuesday morning's video, I really want you to look at that one. Got a lot of good feedback on that. What I essentially did is just featured 7 components to one of our own indexes that we score and track each week. And each one of those pointing to a concerning picture about the near-term go-forward outlook for equities. So I'm not going to veer off path for this presentation. I'm going to stay specifically on the charts and then just ask if you didn't catch that one to go back, and I'll feature a link to it. In fact, I'll just probably post the actual video underneath this one on the blog. Okay, so in front of you is the daily chart of the S&P 500. And recall last time that we had this bear flag pattern drawn out that just played out absolutely perfectly. We had, again, you sell off, you get a consolidation back where it's kind of a retracement, as much as 50% typically. And then you take the downtrend line and you just attach it here on the flag, and that gives you the target. That pretty much played out perfectly. And then today, as I was looking at the chart, looks like a pretty clear bull flag here, and I think I said last time that that was developing. So something to be optimistic about if you're bullish this market, and if the pattern plays out in textbook fashion, we would have an upside target of about 4160. And here we have this 4100 resistance that we would be up against. It's not an unlikely case here to make technically. You've got a buy signal under 0 on the MACD. You've got upward sloping RSI. So yeah, I think there's reason to be optimistic over the next few days for the trajectory of the S&P, at least just based on the daily chart. Now recall on the hourly chart last time we looked, I pointed to a very distinct bear flag pattern, which of course conflicted with what we were seeing on the daily, and that clearly has not played out, right? We broke out past that, so obviously that's not the pattern that's going to prevail here. It did come back late in the session today. It was down most of the day and closed off the lows. Somewhat of an ambiguous pattern here. The momentum indicators would say the momentum is to the downside. However, again, looking back at the daily chart, a bullish looking setup to me. Now, the problem with the S&P is actually the Nasdaq 100, which is more concentrated in the top S&P positions. So the Nasdaq is not a good looking chart. So remember when we ran this last, it was right here. This was Friday's candle. And I said we're bumping up against this pretty stiff resistance right here. And we have very definite bearish divergences. And since then, the MACD has really begun to curve lower. Had a bearish divergence here. So that was unambiguously negative on the daily chart. So if this keeps up and if the Nasdaq breaks down, I assure you the S&P is not likely to hold up because of the concentration in these top Nasdaq stocks here as well. So again, featured Apple and Microsoft, the two biggest positions in the S&P and in the Nasdaq 100 especially. And remember, here's Apple. We'll just look at the daily chart again. That's a bearish rising wedge pattern. And remember that presentation was done right here, and we've had 2 down days, as you can see right in here. For Apple, tech stocks have had not a good week, and that's very consistent with what these patterns were dictating. And pretty much the same look for Microsoft, right? rising wedge that we did come down and failed to break down out of. But here we are these last 2 days since we ran that last video, and these bearish divergences just got more bearish. Now this is not a positive look, but again, based on what I showed you right off the bat, there could be a little bit of upside oomph, and we could test this upper level here in the next few days. Now I featured gold. I talked briefly about our long-term bullishness for gold, but I said very definitely this was just a very, very bearish short-term look, right? And this is the hourly chart, so each candle is an hour, and we did that presentation up in here. Sure enough, we gapped down on Monday, right, and been kind of working our way back out of it right here. But this is still a pretty bearish technical look for gold. We are longer-term bullish gold for some very fundamental structural reasons that keep us in the position. I was just telling you that short-term, don't be surprised if we see some weakness there. On the daily chart, rising wedge pattern. As we extend that out, that's what it becomes. Negative divergences here on both of these, coming off of overbought levels. And there is, the big gap on Monday, fighting back a little bit here today. And then ag futures, DBA, the ETF that we use there, again, pretty good size position for us. Remember I said now this was the opposite of gold on the daily chart. This was a very bullish look. So we were right here when we shot that video, and sure enough, we jumped up and actually come above the 200-day moving average with now a buy signal on the MACD, and we already had a bullish divergence on the RSI. So that's a good technical look, and if we can break through this with some momentum, this actually could see some serious upside after this long consolidation period that we've been through in here. All asset classes are going to be choppy in this environment with lots of volatility. I like this position in terms of our view of the world, the volatility, geopolitics, what we think the dollar is going to do long term and so forth. I think we're going to be in an ag-oriented position here for quite some time going forward, like I think we'll probably be in gold. But that, of course, folks, is based on our general thesis as we see the world today. And I will leave it there. Thank you, folks, as always, for watching and listening, and I'll be back soon. Take care. Bye-bye.